Hey everyone, happy Monday. Today's the first Monday of August 3rd, 2020. Crazy to say. My name's Isaiah Real, host of the Monday Market Commentary, and welcome. Welcome back. In this podcast episode, I want to go over two things with you. Number one, I want to go over the recovery. So the relationship between this recovery we're having in the stock market and in the economy due to the COVID-19. And then also, I want to talk about the election upcoming, because last week I got quite a few questions about that from prospects, from clients, and now it's starting to come to the forefront now. So I want to address a little bit of what I shared last week with the clients and the prospects that I spoke with. But before I begin, let's give a little quick of an update with what happened last week in the market. Last week was overall a pretty positive week. The Dow Jones was down 0.15% for the week. The S&P was up. It was positive 1.75%. And the NASDAQ had a great week, was up 3.7%. So overall, pretty good week for the markets. When you look at the sectors, information technologies was the strongest sector, and also to real estate. And the weaker sectors was financials, materials, and energy. Now, moving forward, let's discuss a little bit about this recovery that we're having right now in the stock market, and we're starting to see in the economy. So last week, if you listened to the news, read the newspapers, read online, we heard that we had a historic drop in GDP for the second quarter in America. GDP, as a reminder, is gross domestic product. It's a way in which we calculate to see if our economy is growing, so it's expanding, or if it's contracting, if it's going down. So as a reminder, though, GDP is a metric that we use, is a data point that represents what happened previously. So it's not going to tell us what happens in the future. It's going to tell us what happened here in the most recent few months beforehand. So it tells us what happened in the last 3 months or so. So since GDP was down for the second quarter, and as a reminder, we've talked about this since the beginning of the coronavirus, that, hey, we're going to see numbers like this. We're going to see headlines like this saying, we're going to see historic downtrends in the economy. This is one of those data points. This is one of those headlines that we've talked about. However, that headline doesn't tell the full story. Let me explain. What should we be paying attention to when it comes to the economy now moving forward? Well, one thing that I pay attention to is the actual metrics, the high-frequency economic data, more specifically that First Trust Portfolios provides. I like to follow them quite a bit. They have some very good information out there for advisors like myself. So when I take a look at that information, I take a look that pretty much for the most part, a lot of it is positive month over month and week over week, telling me things are growing. Things are beginning to expand. When I take a look at this chart, continuous jobless claims is starting to go down. Staffing for companies is starting to go up now week over week and month over month. Steel production is starting to go up. Rail car traffic is starting to go up. And this is both week over week and month over month. Hotel occupancy is going up. Granted, not by a lot, but it is a positive thing that those both are now positive. They're in the green. Hotel revenue is going up. Restaurants are still struggling, but TSA checkpoints is going up by quite a bit, and gasoline production, or I should say gasoline consumption, is going up. So when you look at these numbers overall, I'd like to see that these numbers are positive. These metrics are telling us, hey, people are starting to hire again. People are sending their steel production and their rail cars. People are slowly getting comfortable with going to hotels again. And people are going on airplanes. That was one of the biggest ones. Month over month, that's up 15, almost 16%. So there's little metrics like these that are telling us that the economy wants to grow, which is a great and positive sign. Again, this is going to take some time. These numbers aren't going to change, drastically 1 week from the next or 1 month from the next, but these are going to increase gradually over time. And so the fact that these are both positive, the week over week numbers and the month over month numbers, that tells us, hey, the economy is beginning to grow again. It's beginning to expand. And so I'd like to see those numbers. And For yourselves as investors, as retirees, we want to see this because that's telling us the economy is starting to get their footing again, and most likely it'll help your portfolios and the bottom line. So that's some positive information when it comes to the recovery, when it comes to the relationship between the economy as well. Now, moving forward, let's talk about the election here. I've gotten that quite a bit. Now we're starting to see, can you believe now that we're 3 months away from the election? Isn't that crazy to say? We're 3 months away. So with that being said, we're going to see a lot more now in the news with upcoming debates, probably with both President Trump and Joe Biden talking more about why they should be president and whatnot. But let's talk about numbers. And that's really the question I've gotten here is clients asking me, hey, typically speaking, what happens if a Republican's in office? What happens when a Democrat's in office? Let's talk about that. I'm going to paraphrase a little bit from an article from Michael Townsend from Schwab.com. It's called Stock Market Performance in Presidential Election Years. Granted, I've done quite a bit of research in multiple things, but I like how he lays out the information. So I'm going to, I obviously want to give him credit for what he's written, but I just want to summarize a little bit of what he mentioned because it pretty much sums it up perfectly. So the question is, hey, presidents, which one does better when they're in office for the stock market, Democrats or Republicans? Well, we answer that question. Long story short, Democrats, historically speaking, since 1929, have been more positive for the stock markets than Republicans. He did some research, and he found that since 1929, the total return, so the return of the S&P 500 from the beginning of the president's election up until his end, for Democrats, it's averaged 57%. For Republicans, it's averaged 16%. So quite different. However, as investors, as pre-retirees, as retirees, we have to take this with a grain of salt. We shouldn't take this as tried and true because the world we live in today is a lot different than what it was in 1929. There's been years where Democrats have not gotten 57%, and there's years where Republicans have gotten way more than 16%. But when we look at history, that's what history has shown us. A more reliable indicator, though, actually, recently, of telling us who's going to become president is looking at the S&P 500. And specifically looking at the 3 months before an election, which brings us to right now. So let's talk about that. So when the S&P 500 has risen to the 3 months before an election, the incumbent party generally has gone on to win the White House. So if the S&P is positive for the next 3 months, who knows? Maybe we have 4 more years of President Trump. When it has fallen, the S&P, the incumbent party has generally lost. So again, if the S&P goes down, perhaps it's Joe Biden's to win. We don't know. Since 1928, this trend has been broken only 3 times. It has an 87% success rate. So it has not missed by much. So that tells us a little bit. So we should pay attention to what the S&P 500 does for the next 3 months or so. So what can we learn from all this? Well, we can learn that history doesn't always repeat itself, but it does give us a good variable to see what can happen in the future. If you have any questions, any thoughts, hey, feel free to give me a call. I'm always here as a resource. Hey, please feel free to share this too with any family members, friends, coworkers that you think may benefit from listening to this podcast. I'm always here as a resource. I look forward to talking to all of you soon. Please continue to stay safe. Let's do our part and let's get out of this COVID together. Let's move forward. All right, guys. Talk to you soon. Take care. Bye-bye.